Okay, hello and welcome everyone to this live intraday strategy session on SB Trade Desk. Michael Boutros here with you. Steven says, good morning, welcome back. How was Miami? It was great. It was a beautiful wedding, had an awesome time. We chartered a boat, went around the Keys. Good relaxation time. It's great to be back in markets, let me tell you. We didn't see too much volatility into the end of the week last week, although we have made some very interesting moves that we're focused on. But Steven, Jay, Stefan, thank you. I appreciate that. Good to be back. Tuttle, good to be with you guys here today. So we're a little light on the intraday page as far as active current setups. The only current one I'm in and watching right now is the Aussie dollar. We'll take a look at that in a moment. Obviously, you have Aussie data on tap. You had GDP data, which was the headline data was pretty much in line with expectations, but you did see a slight miss on the industrial production side, which did hit the Aussie last night. As a disclaimer, I'm holding a long position on that right now. We'll go over that setup in a moment. But I want to open it up to you guys as well. Let me know what pairs you're looking at. If you'd like to review any of the specific setups from last week, and we'll take a look at current positioning. So as we get into the U.S. session, guys, here's what we're looking at. The U.S. dollar showing a nice little push here. Okay, so you can see on the index that we've been focused on, I tweeted this chart yesterday. Once again, that same slope support is still in focus. And guys, something's going to give. 12,127 is the high day close that you made earlier in March. Here's the April open. I'm not sure why that's not there. All right, and this is the barrier for the upside. We still haven't been able to clear on a closed basis. The barrier for the downside in the near-term bullish invalidation is still a close below this slope range, which has not materialized yet. The entire month. You guys can see how many times we've dipped into that region. Okay, so this is really the focus. It extends basically to 12,050 on the bottom end, 12,045, whatever you want to call it. But that's the invalidation level for the long side of the dollar heading into this week. So I'm a little bit cautious. We do get the Fed's beige book later today. Not expecting anything major from that front. Obviously, it's giving me an updated assessment on the 12 districts, on where it stands on inflation and employment and all the good stuff. But, you know, you guys will be live with Jamie for the midweek strategy webinar today at 1 p.m. So if there is any volatility, he'll be able to walk you through that, but I don't really think we'll get much. Tuttle, great to see you. Lee says, welcome back. Thank you, guys. GS, review Dragon, if time, please. You're talking about the dollar yen, GS? Pooja says, hi, good morning. Great to have you back. Good to have you back. Thank you. Yeah, we could talk about dollar yen for sure. So here's my, he likes the dragon, right? Here's my take on dollar yen. The level of which we bounced that support yesterday is the exact former trendline resistance and confluence with the 100-day moving average, so 119.22. I think the low stretched just beyond that 119.07. So, you know, I don't really want to play the short side unless we get below this region. As far as the longs are concerned, I'm just concerned that the dollar is breaking down, and if that, you know, support gives out. Let me take a step back. This is the daily chart. This is all you need to worry about right now is the support barrier right here. So you're coming to support. Again, in my opinion, short exposure into 119 is where you want to be a little concerned here. Here's what the intraday looks like for the dollar yen. Let's bring this up on a weekly basis here. Just snap some of these trend lines for you. All right, so the formation that we were looking at off the highs here, which was kind of tidy, specifically on the median line. The upper median line right now is what I was looking at as support yesterday that we broke below, and here we are kind of dilly-dallying here again. So this is no longer going to be a real operative play for me as far as this formation is concerned. But again, look at that trendline resistance from the December highs. You see what I'm talking about? It's been a clear pivot in price, and we're riveting right off that right now. The one thing I don't like is that, on that pullback, on the upswing, here we are holding 40 as support and 60 as resistance. So you made a downside break of the initial weekly opening range. You're testing the underbelly of it as resistance, and now momentum is holding 40-60. So I'm not really going to take a stance necessarily on this. The ATR also has been contracting. If you guys remember when we were scalping dollar yen a few weeks ago, it was giving us almost 30 pips on a daily, quarterly daily ATR. If anything, you know, you want to maintain that the neutral bias within last week's range is how I would play this. Guys, if we look at this from the lows of the month, there's really, I mean, we've been holding the same range for, this is the third consecutive week. Tuttle says, I'm short from 119.73. Nice entry. Is that the highs from overnight? Very nice entry. And in fact, Tuttle, there's actually a really sweet trigger right there. I'm going to assume that's where you took it because you've been on point with those triggers. So very, very nice entry on that. The only thing I would just remind you, don't expect too much. You know, we don't want to try to juice these too much beyond what the market is actually telling us we're putting in. Right now we're putting in about 100, not even, about 88 pips a day on dollar yen. So just keep that in mind, Tuttle. You know, shave off whenever you need to on that position. Just manage it accordingly. But where your entry is, what I would have is near-term bearish invalidation. If we break the overnight highs, specifically for Asia Pac, you know, there's really not much on tap back until 120 again. So take that for what it's worth. He says, thank you, more than welcome. All right, GS says, actually, I meant the British pound. Yeah, we definitely take a look at the British pound too. So the pound itself has not really been the focus for me. As you guys know, if you check the intraday charts from last week, my focus has actually been on the pound crosses. But here's what's going on with the sterling. Oftentimes, guys, if you talk to guys who have been traders on desks for a while, this is called the professional traders market, okay? Sterling is notorious. I've had long discussions with Christian Kerr about this. Is notorious for the throw over, the false break of support, you know, the formation head fakes where you see a head and shoulders formation break and all of a sudden it reverses and takes it right out. So I'm not looking too much into this 46.80 level. If you guys remember, that was a major key region, so 1618 extension off the highs from July, really close to the stretch lows you made on that outside reversal day. There was a lot down there. You also had this major slope range, which has been a very nice pivot in price. Again, bring it into a close on the charts to really get those conviction levels of inflection. And so now we're right back above it. I have no clue what to do with this here, guys. I do think that you could see a major push higher in pound just based on what the momentum signature is doing on this radical divergence into fresh lows, and then the median line break not giving you an extended move. You know, these formations are in play, and the market is in fact following that slope or that gradient. These breaks should be more fruitful than just something like this. So I'm kind of on the sidelines here for the pound as well, and I think it's warranted ahead of the U.S. data that we're getting later today, and in general with where the dollar's, you know, trading on the index. I think it's warranted. There's other setups, and again, the Aussie dollar is a setup I do think is actually pretty primed. We'll go over that in a moment, but for the pound, here's what we're looking at in the intraday. Okay, so objectively, again, I wasn't here earlier in the week, but here's your Sunday open. Objectively, nice opening range. Opening range break here yesterday puts us constructive against the lows, looking higher against that region. Momentum on the pullback in overnight trade came right into 40, held as support, and it looks like you even had a nice trigger break here. It would have prompted some long exposure right here against the lows, looking for the weekly high, which is right around the 148 handle here. Here's what the sterling setup looks like on the broader scale. Again, we haven't featured this on the intraday page, guys, in a couple of weeks now. If you remember, we were trading the heck out of this thing within this formation, which was ridiculously clean. That held for over a month, okay, into March. We finally got the breakdown, and then, you know, things kind of fell apart here for the pound. So it could be a wide broadening process, you know, or a bottoming process, excuse me. And the fact that we're coming off some of these major, you know, medium-term pitchforks and slope lines does certainly suggest near term there's a risk for a break higher here in the pound. So we'll see how this pans out. Again, if you see a topside break above 48.12, this region here, which is a nice confluence region of former trend lines as well, you're basically looking for a 48.50 run. Now it'd be a basic 236. Actually, hold on one sec. Let me just make sure that's the right level. We might need to stretch that a little bit lower. Yeah, so we're going to take this to the new low here, guys. I'm sorry. That level would be, we just completed it. So 47.97, 48.12 near-term resistance completes a basic 236 off the high from February. The lows that we made for last week's initial opening range, okay, which broke on Thursday, and all those trend lines, the current operative median line, the former trend line resistance. So we're going to go ahead and highlight this region right over here. Again, 48.12, guys, it's labeled for you right there on the chart as being the 2013 stretch low there. Just a soft target we've been watching for a while. All right, so near-term resistance and near-term bearish invalidation here for the pound on a topside break. The next target, let's bring up that 38.2. It should line up with that 618 if I'm not mistaken. Okay, a little bit lower. 49.40 would be a nice region of resistance on the top side break here. And in fact, the upper median line parallel comes in just closer. Sorry guys, if I'm going a little fast, I'm kind of just going on the cuff here with you. So let me know if there's anything you guys have questions on these setups. Okay, what's the near-term bearish or the near-term bullish invalidation? What would shift my attention back to the downside on this one, GS? Very simple. It'd be a break below the European lows, which would also coincide with a break back below the initial opening range high. So this is going to be our invalidation level. Could be a proposed formation in play here, similar to what we're seeing in the dollar, in the euro dollar that we were looking at yesterday. That broke. Similar to what we were seeing in Aussie dollar. Sorry guys, a little lag here in my computer today. Could be a play and further reinforces the 148 resistance. GS, does that make sense? Watch for a break here in 60. If you see a 60 pop in momentum and a push through 48.12, I'd be looking for the upper median line parallel. I'd be looking for 149.40. Again, guys, I highlight these targets as topside objectives on a breakout, but it's very important. I do want to take a step back real quick to talk about risk management. For those of you holding longs, you know, that would be your target. If you're looking for a new long to take on, okay, you're looking for new exposure on the scalp side, it's always going to be better to wait for the pullback. Very rarely you're going to want to buy a break of resistance, guys, unless it's news-based, unless there's some serious push behind it on the momentum, unless there's something in the market that's prompting illicit reaction, right? So if we do get a break, maybe a pullback into the close, that would be an opportunity to get long. I'm not really going to try to jump on the long here unless it's a clear break. For example, if the opening range for the U.S. sets up just below this, 9:45, 10 o'clock comes, we plow through the highs, that's a different ballgame. Then you can take a stop against the U.S. opening range low. But as it stands right now, stop down here is just way too far out. So GS, I hope that helps. He says, many thanks. Agree. That needs to break 148. I mean, 148 on the near term is absolutely paramount. Is absolutely paramount. And again, the daily chart actually has that 148, which is the 2013 stretch low right here. Okay. Also look at the momentum. Again, I noted this earlier, but this is some serious divergence, guys, on the pound. Lower low, lower low, lower low, higher low, higher low. Remember, the closer these divergence levels are to 50, the stronger the signal becomes. So as the low continues to heighten up into 50 and as the low in price continues to stretch, that's the strongest signal you can get. Again, it's an oscillator telling us what happened, not what's going to happen. All right? At the end of the day, you're just taking this as an indication of what the momentum profile is doing. Right now, it's suggesting that momentum is getting real tired to the downside. So 148 in focus for the pound. Tuttle says, doesn't that Monday low work better for the pitchfork base? What time frame are you talking about, Tuttle? The 30-minute? I think you're talking about this. So yeah, I mean, pitchforks, again, these median lines are actually going to be, what was I going to say? It's sometimes you got to finesse them. You might be right. Let's take a look. Yeah, that could be the operative trade too. The only thing I just want to prompt you on this is I always will tend to err on the side of caution as far as flattening out the slope more so than making it too high or too steep. That's just because in price action, I'd rather take target early at all times and take profit and take losses early at all times and reassess the scenario to be able to jump back in than necessarily stretch into a target that's just a little too steep. Does that make sense, Tuttle? I don't know if I'm saying it right. Wish there was a way to show you a screenshot He says, yes, it does. All right. Yeah, Tuttle, anytime you want, guys, feel free to shoot an email, or if you want to tweet a chart. I want to keep it as, as casual as possible. If there's stuff that you guys are looking at that you want to also take into consideration, feel free. But also, the operative one we just drew, you want to see how many pivots you've had. That's how you judge the validity, Tuttle, of a slope line, is how many inflection points you've seen. So here's 1, 2, 3, nice inflection, break, kind of messy, but nonetheless, inflection nonetheless, right? Where the one that we just drew, all it has is this, and then these two reference points aren't validated yet, right? They've never been tested yet, so we haven't really seen a test of this slope. So a lot of times, Tuttle, the slope will develop like this, and then it will start to sharpen, and we'll actually adjust it or modify it to this one. So it could be in play right now. I think this is going to be the better representation just on what we've seen price action doing over the last, 42 hours or 48 hours. He says, yes, it does. All right, Tuttle. Cheers, mate. Nice job. Keep it up. Again, watch that 60 level here in momentum on the top side break above 148 for the pound. Stefan will take a look at the euro in just a moment. I do want to just take a quick segue and just cover the Aussie dollar setup from yesterday. So on the intraday charts, it was an interesting read. I actually jumped into a long right on that GDP print for China. So the data came in at 7%, which was expected for the year-on-year GDP print for the first quarter. That comes off of a previous read of 7.3%. Slowdown in broader growth prospects in China has been expected. The thing that slammed the Aussie yesterday, and I retweeted a colleague of mine in the industry yesterday, when he said it, he dropped it perfectly. The thing that really hit the Aussie was the weak industrial production data out of China, not necessarily the weak GDP data. So let's just take a quick look at that. So here's what the data track looked like yesterday with the China data. Where are you, China data? Okay, so GDP came in at 7%. We came off of 7.3%. It was really the industrial production numbers. 7% was expected. We got 5.6. That's on the year-on-year. Okay, year-to-date also softer from 6.9 to 6.4. So you're seeing kind of a sliding from not only the retail sales, which were weaker across the board, but also the industrial production. So production, consumption, both low, GDP also lower, but in line with expectations. This was the real big hitter, and in fact, you saw the Aussie really tank on that. I saw that go right into our invalidation level, guys, and that's exactly where we took the long yesterday, which was right at 75.90. Okay, there's a big region of support. I'll show you on the intraday and the daily. In fact, the Aussie matches up and coincides pretty well. What is that news stream you are looking at, Stefan? So that's the Bloomberg terminal. Bloomberg, you got it, Stefan. Okay, so here's what the setup looked like from last night. All right? Sorry about the delay here, guys. Okay, so here's was the intraday chart. This was a proposed pitchfork. Again, when you look at my charts and you see a dashed line, guys, just as we're using this as guidance, we're really going to focus. We're always going to be focused on the levels. It's always all about the levels for me. And then, these pitchforks on the near term, specifically when you get into the 5-minute or the 30-minute, they're used for guidance. So at the end of the day, 75.90 was the invalidation level. Why am I still holding the position? Here's what the live chart looks like. So we got that spike on the release of the China data and the industrial production. You got that spike. Again, 75.83. We just said 75.90 is pretty critical. So we jumped into a long position here as momentum was holding 40 on this 5-minute chart. And the stop was objective. It was just below the U.S. opening range low for yesterday. I literally gave myself, a 6 pip gap. Sometimes it's better to be lucky than skillful because we were literally 1 pip away from getting stopped out, okay? So at the end of the day, that's still the invalidation level. We haven't seen any deep probe below it that I would start to be concerned that it's breaking just yet. Why is that level important? 75.90 is not just a basic 618 of the stretch off this week's low. That's the least of the reasons. If you go to the daily chart, 75.90 is also representative of the low day close for the year, which we haven't seen a close below yet. Okay? And here's actually the close that we made, the close low that we made in March. So you got a double whammy here at 75.90. It links up with a 618 on the near term. Momentum has been putting in divergence with a lower low here, even if this is just making slightly lower lows and we're making a little bit higher lows here, suggests that we're getting a little tired. Now, are we levered to the hill on this? No, this is the first trade back for me after a couple of days off here, so I'm still needing a break above 76.10 at 76.15, which was, where are we? Sort of where I was looking at last night as the initial target. We're probably looking to take off a quarter of that trade, but 76.45 is really going to be the break that'll put things in a little bit more of a constructive path, I think, and that's the swing high that you made yesterday in U.S. trade, and a basic 50% of just the decline from last week's high. So the levels are pretty clean here. I'm not going to really stress this at this point. I'm going to stress a break of the Asia Pac opening range highs, which would validate our bias. We'll hold on to those long positions. Again, looking at this point with that slope, maybe you push that target a little bit higher at 76.25 as maybe somewhere we start taking off a quarter of that trade, bring stops to break even at that point, and see if we can get that stretch into 76.44 initially. Any questions on yesterday's Aussie setup? Looks like I don't want to start matching price action to validate what I'm seeing here, but we'll see if we can get that momentum break with a move above 76.10. U.S. opening range setting up, low at 75.80, high at 76.10. Okay, and that also is representative of the London high as well. So like I said, 76.10, 76.15 break, that would be a nice opening range move here to shift our attention back to the upside. Okay, so that is Aussie dollar. Any questions on Aussie, feel free to post them on the message board. Again, we're going to see if we can get that topside move. Bullish invalidation still remains at 75.90, especially if the U.S. opening range breaks this low, guys. Sayonara. Okay, we're going to jump out of that position and let this thing pull off. We'll see if we can get some support a little bit lower down into the 75 region. Before we move on to Euro Yen, definitely in Euro Dollar mark, we'll definitely take a look at those. Here's a quick update on what's going on in gold. I updated the weekly and daily for you yesterday. It's really important to watch this week, especially with what the dollar index is doing. We just talked about the dollar index checking once again that major slope support. Here's what gold looks like on the weekly. Okay, turned ahead of 1236, momentum turned ahead of 50. I'm not invalidating the long side of the trade just yet. The pullback is what we were looking at. If you guys followed the intraday page, the pullback that we've been looking at since last week did materialize and go all the way into the 50% retracement. That was 183.37, and that's where gold found support yesterday. Okay, we're off the 50% off of the low. The major key support and the thing that would shift the broader bias back to the downside in gold is not until 1173. So, shorts into here are at risk. Now, one other thing I did just want to tack on here really quick, guys. If this is going to be just a basic correction off the highs, the basic 100% extension, or two equal legs down, takes you just above that 1618. Right here at 1173. So this whole region, for me, is sort of like a no-fly zone. Okay, this is where you would look for the inflection for gold. A rebound off of this would give you a beautiful long exposure for a nice swing, possibly back into the 1200 region, 1220 again. A break below this invalidates the long side of the trade, and you're looking for 1158. You're looking for 1150. So also within the confines of this region, not only is it the 100 and 618 and the operative slope line, in addition to that, the opening range low objectively comes right here at 1181. So any way you look at it, guys, it's a $10, $15 region. I just wouldn't play right now. It's just not something I'm interested in. If we get long triggers on a scalp basis within this region, sure, I'm all about it, especially if the dollar starts coming off. But, I'm not going to initiate any short exposure into that region. It's just not something I'm interested in right now. either way, gold is poised for some serious moves here heading into the end of the month. All right, so for those of you able to trade CFDs or if you're trading on the future side, be on the lookout. We're looking for a major inflection off this 1177, 1173 sometime this week. We'll have to see how the dollar is reacting, but this is going to be pretty big. All right, so let me jump into your questions here. Stefan wants to take a look at the euro dollar when you have a chance at the end. Nope, we'll do it right now, my man. Let's take a look at what the euro is doing. So here's what the daily looks like. Put things in perspective a little bit. Okay, so the rebound that we made off those lows still has not been tested. This is off the 2008 and 2010 lows, this trend line that caught the major decline earlier last month. This technically looked like an opening range break for the month, and this is the level that you need to keep in mind. Okay, this happened last week as I was leaving. So the 107.16 barrier or so, okay, here's your monthly open. You stretch into a new high. You didn't really test that low, so I don't want to stress it, but the fact that we're finding resistance there now is something I want to keep in mind. Okay, and that's basically like 1710. I just don't really have a play here for you at this one, Stefan. You tell me what you're looking to do. I mean, here's the near-term chart. I tweeted this last night. Look like, and in fact, the break of the lower median line parallel did charge a nice move. It coincided with a perfect trigger break in momentum. I tweeted this on SB Squawk, and a break of the the Asia opening range low. So either way you look at it, this was actually a nice short trigger for the euro last night. Again, I wouldn't be holding anything, long-term from this level. If you have a short from near or closer to 107, I think you can play that one pretty nicely here and start to shave off a little bit. You don't really need to get concerned until we get back above basically the resistance we're checking here. You could possibly see another rally right back into that trend line test as resistance. But, I'm not really crazy about pressing the dollar pairs, guys. I know a lot of you are all about the dollar right now, but there's so much opportunity elsewhere. If you're hell-bent on trading the euro, why not trade the euro Aussie? You got a better ATR. You got 41 pips on it. It's got the same, pretty much similar setup, only I think on this one, it's pretty much cleaner because you're watching what's going on in the Aussie as well, right? And you can play the dominant trend in the euro while playing the rebound in the Aussie. So for me, something like this, trying to get short against 104.30, 104.50 has been sort of the game plan since that break we made last week. This might be a better play. This might be a better play. Again, on the intraday, here's what it looks like since the start of the week. So on a break of this formation here, again, some divergence. No divergence. But a nice trigger break nonetheless. So let's see if we can adjust this. She's not the cleanest, but inflection nonetheless. Let me put that proposed for now. Okay, you see how momentum's holding 40 on every pullback here? Multiple breaks above 60. There is some divergence here, but this could be the extent of the turnover. In any event, Euro-Aus is going to be my favorite setup if you're trying to play a Euro pair. The opening range for the week, I think, at this point is pretty safe. So here's your opening range low, 130. Let's just call it 138. Opening range high is basically at that 618, 104. Let's call it. And let's just adjust some of these levels here. Again, on the Aussie crosses, guys, I've told you this before. 88.6 is uncanny on the Aussie and Kiwi pairs. How many times I've seen that retracement catch just tumbling markets, things that are falling apart. The 88.6, lo and behold, on some of those commodity pairs can sometimes be a real godsend. So that just caught it right there. But in any event, let's take the operative move here. Okay, so these are the levels I'd be looking at for Euro Oz near term, guys. It looks like you're breaking this region right now, and for me, this would be near term bearish or bullish invalidation. So if you do see that move, I'd expect. Get rid of that 7642. Here are the levels I'd be watching. If you see a 40 break here and a move below these lows, that's actually not bad a stop. Watch the U.S. opening range against 39.65. You're looking for 40 pips. Might not be a bad play. I'd rather see if we can get another rebound here to take the stop against that, but look for the break to take you back into like 38.73. Those are the lows that you made back in European trade yesterday, not an overnight trade. And also the swing high that you made here for Friday. The broader trade is the most important thing. Again, this is a major resistance, and if this holds and you see the 40 breaking momentum on the daily, it's just continuation of the broader pattern to the downside. So actually might be a good timing here for the Oz. Stefan says Euro Oz. It's been in a multi-week play on this. Shorted at 110, Stefan. $110. I don't know if that's a typo. Euro dollar. Okay, that makes sense. I was like, where's this guy talking about? Yeah, well done. Well done. Let me see where that 110 region takes you. Yeah, absolutely. Huge breakdown from up there, right? All right. So, Mark Haverman says, never mind Euro Yen, same thing just happened. No, let's take a look at it. Look, just went at 126.50. So here's what Euro Yen looks like. This is the featured scalp that we've been following for the last like 3 weeks, right? So the break that you made late last week on this move back below this median line kind of invalidated the long side of the trade. And in fact, on the Euro Yen scalp, here's what it looked like. So this was the invalidation level right here. Let's see if we can update some of these targets for Mark. Yeah, Mark, this is actually, I wouldn't even say it's the same play necessarily as Euro Oz. It's a little bit different in that it's start to respect, well, let me take a step back. It does have a very good weekly opening range. That's what I would be playing. He says the pitchfork with the ML off the lows. Yeah, that one might be very similar as far as that break is concerned. But I still have us within this channel right here after this little blip. Again, building divergence across the region. It's just staggering when you see all this divergence levels across the board. And the reason that you don't want to take a trade based on that, guys. Do you see how long this is lasting? Another reason why you don't want to stick with all these basic strategies telling you, oh, you buy divergence when it's bearish, you buy sell divergence when it's or vice versa. That's not the way you want to play this. There's something to take in mind as you're watching price action, and price action is going to tell us when we should be doing that. So right now, it definitely looks like this thing is getting tired on the short side. Mario Draghi's been on the horn. I'm not someone who's going to follow him line by line, guys. It's all noise. Anyone who's talking about the ECB possibly tapering is, I don't know. I don't know what they're thinking about. They just started QE, guys. We've been doing QE for years. It's not going to be something that they're going to react to from 1 month's data. So all these bank research wires that were suggesting that maybe the ECB will soften its tone today, completely wrong, right? No change to any of the benchmark rates, still negative, and that's not likely to change. So if you're looking for new, fresh euro-dollar ideas, don't be swayed by what you're hearing on the headlines as far as the ECB is going to do this or do that. They just started the easing cycle, guys. This is not going to be something that's going to be wrapped up in a month or 2 or 3, and it's going to be data dependent, but on the long stretch, right? We can't start looking at 2 months data and say, okay, the ECB is going to start paring back its easing. Guys, have you been able to hear me well? I just noticed that the microphone fell off. Okay. So, Mark, does that help? Again, guys, if it's not on the intraday page, it doesn't mean it's off limits. It just means for me right now, it's not going to be something that's an operative trade for me. I try to only post the trades on the intraday that I'm actually involved in because I'll be following them much closer for you. So again, here's a quick look at the Aussie dollar. Still holding a pretty tight U.S. opening range. Again, we need to see that topside break to validate. I'll take off some as we hit the Tokyo and Sydney highs if we get up there. That's where my stops will go to break even. And we'll see if we play it from there on the Oz. Stefan says, I hear you well. Adrius too. Thanks, guys. Thanks. Eurodollar is a long play, not scalp, in my humble opinion. Stefan, is a long-term play. I completely agree. Which is why, Stefan, if you want to trade the euro, that's why I go into the crosses, my man. I'm not someone who's going to be crazy about trading something like this on a scalp basis. This is kind of just where you want to sell. You want to sell into resistance. As far as the upside is concerned, we definitely played the long side of the euro, and I think that's warranted too when you get clear-cut signals. So for me, guys, again, on the scalp side of things, we have to keep in mind what we're doing. First of all, if you've been taking the swing trades, they've been on fire lately. Those are trades you want to take independently, right? These are trades that you want to do on the intraday, irrespective of what the long-term positions we're taking on the swing side of things is. They're two separate strategies. So, I have no problem taking a long on a conviction signal. No problem. I don't care how strong the trend is to the downside. There's a clear 30 break to the upside on a daily chart. There's something data-driven. You break a major resistance or trend level. We're scalping, guys. Our stops are tight that the repercussions of the trade being wrong are not going to be as bad as a larger scale trade here. That being said, Stefan, you're absolutely right. The long-term trend, no one's going to argue, is not to the downside, and especially where you are in the divergence in monetary policy, the fundamentals are still supporting it, right? ECB just starting easing, Fed talking about starting to normalize, talking about raising rates late 2015, early 2016. So that's only going to propagate this trade lower. That being said, no trend is one directional. You're going to get interruptions, you're going to get corrections, you're going to get near-term pullbacks, and there's nothing wrong from a scalp side of things of playing those as well. So a quick note on that. Stefan says, right on. Yeah, the crosses. Tuttle says, Michael, I tweeted a sterling 30-minute chart. Would you take a look at it? Sure. Let's take a look at what Tuttle's looking at here. Aha. Not bad, Tuttle. Yeah, that could be something in play here. So here's a chart that Tuttle is sharing with us. This is just from off the lows here. Could be a very nice play, actually. Let me mimic that on our side here. The only thing I I'm not a big fan on is, again, it is, got to finesse the levels a little bit, but it's taking them off of levels that aren't either a session high or a session low or something to that degree. So Tuttle is looking at this. You know what I mean? Like, Tuttle, this is not even the U.S. session high for that period. That session high came in just about here. That being said, you are seeing major more inflections on this one, so we'll keep that in view. And it also, same thing, highlights 48. So sometimes, Tuttle, not to dismiss anything, this is a really nice play, but sometimes, guys, it doesn't even matter. If the technical structures and the fib levels are all matching up at the same region, whether it's angled like this, whether it's sloped like this, as long as we're highlighting, it's all about the levels, right? It's all about the levels. Joe Devine says, I am new to the group and was wondering what the current scalp play is, or is there already one in Aussie dollar in play? So, Joe, the bias for the Aussie is weighted to the upside above that invalidation level at 75.90. So above this, I'm looking for long triggers. That's explicitly set for you right here. Looking for long triggers while above this threshold, which was the 75.90 region. So we're looking for momentum triggers. First of all, Joe, welcome to the room. Welcome to SB Trade Desk. Guys, for anyone who is new to the program, I do want to quickly remind you that the top right-hand corner of your GoToWebinar screen, there's a little camera button. Any of the charts that we're talking, anything that we're discussing here, you can feel free to take a quick snapshot so you can reference these charts at your leisure whenever is important to you. So definitely want to encourage you guys to be taking snapshots throughout the session. Any questions that you have, Joe, feel free. I try to keep it as casual as possible here so we're all on the same page. But welcome aboard, my friend. So I'm personally looking for long triggers while above 75.90. We need to clear, like I said, this 76.8 level on a closed basis for a candle to try to maintain that upside bias. Once we get, or at least for this scalp, once we get through those highs and tag that high from Sydney, this is where we're going to take off a quarter of the trade and bring the stops to break even. We'll see if we can get that push into 175, into 76.44 here, which is the next target. Joe, does that make sense? So as this thing pulls back into that 75.90 region, you're looking for long triggers. If it breaks, again, you're going to invalidate that long side. The only reason I'm still in this trade, Joe, is because I had to stop against the U.S. session lows here with a 6 pip, literally a 6 pip cushion, which just missed. So again, that's more luck than necessarily skill here. But we'll see if we can get that upside swing. Make sense? He says, got it. Thanks. All right, Joe. Again, welcome aboard, man. And feel free to just reach out if you have any questions on the service or anything I can help you out with. Okay. If there are any other pairs you guys want to look at, feel free to throw them out. I do want to caution you on today's session. Again, we still have a lot of stuff on tap. As we get deeper into the session here, don't forget you're still getting the Bank of Canada interest rate decision at about 10 o'clock in a little under 45 minutes, and manufacturing production here from the United States. More importantly, heading into the end of the U.S. session, you will be getting the release of the Fed's Beige Book at 2 o'clock. Now, not necessarily something that we want to stress per se, guys, but it's going to be the updated assessment on the 12 districts as it pertains to employment and inflation and the like. So we'll definitely want to be around. We did just get capacity utilization right now, 78.4%, missing expectations for 78.6. So could further propagate the Aussie to the upside on some dollar weakness here. Let's see if we can charge a break on that. But certainly a weaker print here on U.S. capacity utilization and manufacturing production right in line at 0.1%. And looks like we're getting the break there on the Aussie. So let's see if we can climb into that 76 or the London highs. And 76.30. Trigger break to the upside. A little messy on the test of support, but keeps the upside in focus. Again, guys, don't chase. If you're not in any new positioning here, I'm going to prompt you on trying to jump into anything new per se from here, unless you're someone who's super light in their feet. Again, you're always going to be better trying to get this on the pullback than jumping in from these levels. Stefan says, M. Boutros at SB Trade. Yeah, you spelled it wrong, but Stefan, that is right. Is my direct email address, yeah. And if you send stuff to info@sbtradedesk.com, guys, they do forward it to me as well, for me and Jamie. So either way, feel free. Cheers, mate. Appreciate that. Michael, I had one more question about sterling dollar. Tuttle, I have one more question to answer about sterling dollar. What a coincidence. Let me know what you're looking at, Tuttle. We'll go back, no problem. Adria says, can we look at sterling key, your views? Glad to see you back. Adria's glad to be back. Thanks for that. Here's what sterling key. Before I do that, Adrius, if you don't mind, let me entertain you a little bit about the Kiwi dollar. Oh, Tuttle, I missed your question earlier. Oh, there was an RSI break at that New York Open. Was there a good trigger on that 5-minute for the pound? Let's take a look. Okay, approaching that first target, guys, on the Aussie, so keep your eyes peeled for that one. British pound. The only trigger I see here would have been something like this, which is actually a very strong trigger because you had some divergence into a trigger break. So 9 times out of 10, we will take these types of positions. So here's a decline, momentum, divergence, much lower low. Holding the lows in momentum is divergence. Remember, all you're looking for in RSI is for this not to validate an extreme in price. An extreme in price meaning a new low, no new low made here in momentum, followed by a trigger break after a 3-point. That's actually a really, really strong trigger. That's the only thing I see here. On a little bit more of a conservative approach, this, would have been a break of the London opening range high. You see here in green, this is the London open. Okay, so the London opening range high broke here, but momentum is still holding 60. So actually, I still don't like any type of long exposure from here. The only thing that would have been the trigger would have been down here, and you would have been out of this already. 25 pips is a quarter of the daily ATR, 26 pips. Tuttle, does that make sense? He says, this is very helpful. Thank you. Yeah, you're more than welcome, man. You've been on fire with those triggers. Keep it up. Keep it up. You're finding more triggers these days than I am, Tuttle. Very nice. So, sterling key for Adrius. I just want to show you the Kiwi dollar first because this thing is ridiculous. This is coming into focus for me and Jamie. We were talking about this morning. This thing was absurd on the way back. I know you guys have seen this 100 times, but I just like looking at it, so I'm going to show it to you again. This slope range that we were playing for months and months and months, really nice, right, on the inflection points. This is kind of the one I'm eyeing right now. And within this, you have this one. I know it's a really messy chart, guys, but try to visualize this here. Here's the current operative slope that we're in. So what's in focus for me is sort of this region right here, right below 75, 60. Very interested to see what happens. It's not necessarily a trade setup yet, but very interested to see what happens. So if we break through this, that'll invalidate the opening range for the week, which is very clearly defined at this point. And that would shift the focus back up to the upside, looking for a rally into 76. I know it's only 40 pips, but that's a huge region of resistance and inflection in price in and of itself. And on the rebound here, 70 break, if we hold 60 and we push through, you could see a little bit more of a recovery here. That being said, I'm looking for possible shorts here right now. I know it's going to invalidate my bias. It would be a break out of this. Near term, up here, from a scalp bias, there's no reason for us to front run the break. We'll possibly be looking for a trigger, whether it's an opening range or a spike into this on an emotional level, where you could possibly jump into a short again. So with that in mind, with the sterling kind of testing, or the Kiwi rather, kind of testing a near-term resistance, right? Obviously 75 or 74.50, this region here is still the key support and the monthly opening range low. But the point is, the whole April range so far, guys, is kind of ridiculous. It's kind of ridiculous. So it might be worth it just to wait this range out. The break would likely give us a really nice play here for Kiwi dollar. So with that in mind, here's what Kiwi sterling key looks like. This is the daily. And I was talking with who about this? David Song last week. So the break of this This was not validated, right? First of all, we're only using 3 reference points. We only have 1 inflection, not much play, so that's not something we're going to stress per se. Here's your April open. Don't want to stress that 88.6 anymore. Okay, bear with me one sec. I actually haven't taken a look at this in a while for this new low we just made last week. Hey, Stefan, you're more than welcome, sir. Anytime. Feel free. Okay. Give me just a second here, guys. Let's just see what this looks like. Yeah, the slope is almost identical. So you see when I drop this slope line here, guys, which takes into account the broader encompassing corrective move here, look at the slope of this and the slope we were looking at from last month. Or what am I saying? From last year. Right? Same gradient. Same exact gradient. So I'm going to go ahead and replace this one with kind of using this as support. And that highlights 95.20 or just ahead of the 95 handle. And on the near term, Sterling key looks like this. Oh, I just moved that. Okay, I'll have to find that again. And here's the weekly open for now. Yep. All right, some clarity here. All right, let me walk you through this real quick. So here's what it looks like. You completed a basic 1618 extension from the decline off of February high. So if you use these 3 reference points right here, 1618 is pretty much basically where this thing got floored at 94. That's also the lows for March. Okay. And on that decline, you're seeing that 94.30, 94 handle catch the lows, especially on a closed basis. So here's the deal. The opening range for the week looks like he stretched right into a basic 236 of that decline. That's 97. At the same time, that slope line, again, this dates back to, oh, this is the one back from October on the daily chart that we looked at. That's up there as resistance. And this is going to be the near-term bearish invalidation level. So while I'm still more inclined near-term to try to press longs here, I need this to sort of clear out for me to take a conviction stance on the long side of Sterling Key. And that actually opens up a run into like 198.90, guys, which is not a scalp by any means. That's a larger scale trade here. So if this does materialize on a topside break and it invalidates the short, you want to tack on a quick retracement here, check out the 618. Let's do it together. See if we haven't surpassed that already even. Oops. There we go. Yeah, so the 50's right there. The 618 comes in at 97.60. Okay. Nice 50 pip run. Quarter of daily ATR is about 50 pips. So again, a wider range scalp. This is what you'll be looking for your profit targets with your stops 50 pips or less minimum. And then again, on the top side stretch there, like I said, I wouldn't necessarily even stress that 78.6. I'd be looking for that run into 98.90. That's a big, big region. That's a big region. Adris, does that help on Sterling Key? Let me know what you're looking at here. This is sort of the game plan I'd be working with. Initially, right now, Mike, what are you looking at for Sterling Key? I'd probably be looking for this range for the last 3 sessions that we put in since Monday. So I wouldn't be interested necessarily in the short side if this breaks. I would be interested in long exposure on a top side breach here, specifically if the pound finally makes this move, or if Kiwi comes into this resistance and offers a nice short trigger. I think the Sterling Key at that point would look much more appealing at the same time. Does that make sense? Adrius, hope that's gotcha. She says, yeah, all right. Appreciate that, Adrius. So, quick look back at the Aussie position. Okay, it looks like we're teetering out just ahead of that. So the limit didn't hit at the London highs yet. Again, I'll keep you updated if I change anything on this, guys, but I'm still going to be looking to see if we can get that stretch into the Sydney-Tokyo high. If you don't, and this thing fails, and specifically into the 10 o'clock, 10:30 hour, if it's sort of drifting up here, I'm more than likely take off half of that trade, bring the stops to break even, and just let it play out. Remember, tonight you have Aussie data on tap. Take a quick look at the economic docket. You have Aussie data on tap as far as employment data from Australia. Okay, we're looking for a print of 15.0 thousand. That's down from 15.6. Unemployment widely expected to hold at 6.3%. Again, we'll be looking for the breakdown of the part-time and the participation rate, which hasn't really been that all of an issue for necessarily Aussie as much as the United States, but nonetheless, that'll be coming out at 21:30 tonight. So major event risk for the Aussies there. Typically, guys, these goes both ways. I don't even want to set an expectation for, bucking the trend or trying to fade this. You're going to play this at face value, okay? At the end of the day, if it comes out much weaker than expected trade and you're on the long side, you probably want to jump out. If it's weaker than expected by, 15.0, ends up being 14.8 or something like that, wouldn't necessarily play it. On a strong print, you're still looking for a possible breach on the upsides. And that 76.45 is the region that we're looking for as far as that stretch is concerned. All right. So without further ado, that brings us into 9:30. We're going to wrap it up here. Guys, again, we do this every morning, Tuesday through Thursdays at 8:30 Eastern. So I'll see you all tomorrow morning, bright and early. Hopefully we'll clear out some of this noise from the euro and some of these interest rate decisions from the BOC. Don't forget that's up on tap in just half an hour from the Bank of Canada. So we're getting that stretch in the Aussie, guys, by the way. Again, take off half of that trade or a quarter here at 76.30, the European highs, or the Asia-Pac highs from last night. And another quarter of the trade will get taken off if we reach 76.45, 76.50 in U.S. trade today. Stops will be at break even once that hits as well. Also, one last quick reminder, Jamie's webinar today, midweek strategy webinar at 1 p.m. Eastern. Again, he'll be hitting that up just as just right ahead of the beige book, so he'll give you a nice little tell on what he's looking at as we head into that event risk. Best of luck trading, guys, and I'll see you all tomorrow morning. Cheers.